IVM.
Hey, welcome to episode 68 of Shunya One. I'm Amit Doshi. Shiladitya unfortunately couldn't be with me for the introduction, though he's there in the episode. In this episode, we talked to Mukesh Kalra, the founder of ETMoney. So a really interesting conversation where we talk about how they are making it easier for people to invest and handle their money just more effectively. I think you'll really enjoy it. So we had a couple of interesting weeks on Slack as well. If you look at the poll that we did after Nitya's episode a couple of weeks ago, we asked the question, do you prefer automated integration where OTP is concerned, or if you would prefer to type in the OTP for safety's sake? We actually have a fairly close to 50% response. Why don't you go back in and see if you want to change that? Go and play on that poll. Also, go and submit your answer to the poll that we did following Pankaj Mishra's last episode, where we're asking about what drives you to subscribing to a tech news site, whether it's authenticity of news, whether it's a known writer, or whether the news format matters, short form or long form. Give that an answer as well, and I think we'd love to know what you think. And with that, let's get on with the show.
All right, today we have with us Mukesh Kalra, the founder and CEO of ETMoney. Welcome to the show, man.
Hi, thanks. Thanks for having me here.
Yes.
I know it's been a chase for both of us to come here.
Exactly. You're a Delhi-based founder who happens to run a fintech company and keeps coming to Bombay every day.
Yeah. And I'm hardcore like Bombayite. Have been half of my life here, so.
Exactly. So I think it was due to happen for sure.
Happen, yeah.
And like I said, I have some deep analytical models which tell me about when, which founders
like the way you intercepted like on WhatsApp, I was just wondering which clever tap event triggered that.
No. I'm always looking to have all the cool folks on our show, which is what makes this interesting. And of course, I would love to, hear it from your own words about how this whole journey of you coming and building ETMoney actually transpired from you being a Bombay boy.
So essentially, not many people know I come from a very small town called Bhusawal in Maharashtra.
Bhusawal Junction is, of course.
Junction, yeah. And my father was in kind of defense, and we actually ended up into multiple cities across the country. And after that, I moved to Bombay to do my engineering, and that's how Bombay started. And being in Bombay, in Bandra, like almost a kilometer from here, for like almost 10, 12 years.
Wow. Okay.
So yeah,
and
pretty much.
That was in the consulting era of your
life. So that was engineering, and then after engineering, I worked for a year to really pay some bills and all that. In fact, we did a small entrepreneur stint at that time.
Okay.
Which was Dhirubhai Ambani Entrepreneur Program was there, where you used to sell mobile phones.
Oh yeah,
you know that
from the original Reliance Infocom.
Original Reliance Infocom.
Yes,
the 501 offer.
Yes.
So
yes, the first phone.
The first one ever. Yeah. So we, as a group of 3 people, we started, putting this thing together, and we started selling phones. By the way, that's for like a year. And that was our first and only profitable venture, with a meager profit of some $700, but it was fun, and it was it was like just this starting point of me getting into business or moving to entrepreneurship. And then we did MBA. I did my MBA from Bombay itself. Post that is when I worked with Nielsen for 2 years, and then MCOJ happened. And then Naveen was looking for people to get people on board. And at that point of time in Mobi was called MCOJ.
Yeah, exactly. When you mentioned MCOJ, I was going to actually jump in and tell people that.
Yeah, the first product, and the whole thing was that there was no one to actually manage product or anything in that sense. And it was just a concept in the minds of the founders at that time. We used to operate very, very, very close from here, Ville Parle, like very small office. And there I built the whole product from scratch.
Wow.
The first one was the whole deal search engine. Which was SMS-based deal search engine. That's why it's called MCOJ.
Yeah.
Like we did a lot of stuff around it and realized that there is no market for it in India because people already know the deals that are running in the malls. So it's like, I think we were ahead of its time. And then suddenly in August, after 8 months of all the work, Naveen comes into the room and said that we are changing our business to becoming an ad network. He said, wow.
That's quite a challenge. And again, this is the early days of being a startup in general, right? In India.
And and there are some very, very funny instances there, right? So what had happened was at ETMoney, we had actually run out of money as well. So Naveen comes in one day. We actually decide that we're moving to an ad network business. And there were insights around how different player was doing close to 300 million impressions from India at that time.
Oh, wow.
That was like 2008, I think.
Yeah.
And then we actually said that we'll have to pivot it to, if someone from outside is actually doing 300 million impressions, there is a market out there. Right. And it was which is part of the overall plan at M-Coach going forward. So it was more of an acceleration. And after 2 months, he said that we are not going to get salaries. Well, okay. Dude, come on. This is like... And then after a month, he said that I will need your credit cards to be put on the table because we don't have money to run the show. And it was funny. The thing is that...
all things, by the way, I have also seen and done myself. I'm sure you've done it. So it's okay. It's all legit in founder.
Yeah. So the whole thing was that... I think at that point of time, the key learning for me personally was that once a group of passionate individuals come together, and if they're all in, they're really all in. Like there was no reason for us to really continue, and also not get paid and get our credit cards also kind of. That's like, but he said, "Okay, we are like." I have this famous thing of infinity plus one is infinity. So, but I think to give it to the team at that time, I think the team was super confident to pull it off.
Yeah.
So and after like 8 months, we got money from Kleiner Perkins. 7 million, I think that was one of the biggest raises.
Yeah, that was huge.
So that actually made us a spoiled brat of, InMobi. So we managed there for like three years there, and that gave us the confidence to actually start on our own. So myself and Santosh actually ventured out of InMobi. That in itself was a very tough call.
Right.
Because we had given it all, and 3 years we have actually come to a point where we are growing rapidly, and then
you are at its like peak, highest.
Highest, and how do you do those decisions of the opportunity cost being so high, and you still want to do what is like really giving you sleepless nights? So I think at that point of time, the core thing was for us to say that it's really taking sleepless nights. Right. Like we were not able to. Have really focus on InMobi which was our like 12-hour job. But this whole idea of, really solving for the consumer's financial problems and was really getting on to us. And there was no point in actually doing like having a split mind around it.
Correct.
We took the jump, and that's how Money Sites actually came into existence.
Interesting.
And for the next 3 years, we managed Money Sites, which was like the Wealthfront of India. Way before Wealthfront was even there in US. So it's like, and typical all entrepreneur mistake that you can think of, like, as we were discussing, right from, the product was great. The team was also good, but I think few other things were not with us. One of the things was the market power, and we were discussing that offline as well, whether do you really have, so while you might have a great team, you might have a great product, but if the market is not with you, all of this ties into like, sums into zero.
Yeah.
So that was one big learning from that point. At the end of the day, you have to ensure that the whole movement of offline to online is really rapidly happening. Correct. And that was like 2010-11. So
it's just the start of it.
Just the start
Barely
of it.
the start.
Barely the start of it, yeah. And so we actually kind of ran it for 2.5, 3 years. We were doing good, and we raised money as well. Bloom was our first investor. In fact, that was probably the first company also that they had invested in, our company. We managed it for 3 years, and then we took because things were not going the way we had actually wanted it to go, we put it slightly on the back burner. I joined InMobi back. Naveen asked me to actually come and take care of some of the other products at InMobi. For 2 years, I was at InMobi while we were figuring out what to do with Money Sites in that time. And in between, Times Internet actually kind of approached, and we were discussing with Times Internet as to do a strategic partnership.
Correct.
But it eventually we became part of Times Internet, and that's how ETMoney came into existence 2.5 years ago.
And
long story in long form.
And those 2.5 years ago was actually the right time, I would say, for something like this to start building up, because fintech was the only thing anyone ever spoke about 2 years ago, I think.
Yes. And the thing is that, I think a lot of learnings that were there at Money Size time, like the market not being ready, the consumer shifts that are happening, and the whole mobile thing actually coming in full flow. And the core thing of we being able to really make an impact through mobile and tech was visible.
Right.
More importantly, I think, is that what we realized is in the financial space, you have to figure out a way to have low cost of customer acquisition. You have to, because usually what happens in the unit economics, thing is it's a front load model. So you have to spend a lot of money to get consumers.
Right.
And consumers pay you off over a period of time.
Correct.
Right. So you have to really bridge that time when the unit economics becomes positive.
Right.
For each user. Yeah.
For each user. So that's why it's usually a tough market and the prices are high. The cost of acquisition is high because you're not competing against other startups. You're competing against the financial services brands,
Banks.
right? And they're like supremely inefficient in terms of how they market on digital.
They just have money.
They have money.
Yeah.
And there is and what happens then is that all the cost across the ecosystem for advertising is always inflated because there is so much inefficiency coming from the guys who have money. So that's another thing that we realized as part of,
That's actually a really interesting thought. I had not really thought of it in that sense. That's because that applies to other industries as well, right?
Yeah.
Inefficiencies with people with tremendous amounts of money are just going to inflate costs across the board.
Yeah, absolutely. And I think what happens then is you have to really figure out how do you have inorganic channels in place and all those things have to actually be figured out. So that was one part of it. And the second one for us was the key driver in the business is actually trust, right? So people and there is zero margin of error. Like you cannot have a buggy product or,
with people's money
with
can't,
people's money and people investing like lakhs of rupees through the app, you cannot, So, and the trust element is also important and that is also related to your customer cost of acquisition. So you have to manage both the things and both the things actually take a significant amount of dollars to build.
Correct.
Right. And I think Times Internet fitted really well in that framework. And the third thing was that is there someone who is more long-term oriented?
Right.
Like you take any business, it takes anywhere between 7 to 10 years to really make it.
Typical VC life cycle,
Yeah, typical VC life cycle in that sense, right? And in financial services category, if you really look at it, the gestation periods are much larger, right? So you have to figure out that you are patient enough and you have a partner who is patient enough.
Okay.
Otherwise, if you actually move into a very strong growth phase very fast, then you might end up having the problem of not being able to reach the threshold for you to really start. And the business is such that it accrues, right? So it's an annuity kind of business. So today, for example, if you're investing in mutual fund today through ETMoney, you will keep on investing and your amount that is there will keep on growing over a period of time.
Correct.
And when the amount is significant is when the ecosystem starts to make money.
Right.
Right. So it's an accrual business.
It needs to be value adds over time.
Correct.
Yeah.
And it pays off over a period of time.
Correct.
So you have to ensure that balance is like really maintained. So these were the learnings from our previous company, which led to we choosing Times Internet as a partner to really build this out. So access to a huge consumer base, very strong brand advantage. Though we started as smart spends when we started off, right? And the third is that there was a clear long-term alignment between at least me and Satyan to actually say that how we want to build this out.
Correct.
So that was a very clear thing that came out. So instead of raising like 500K to $1 million to again kickstart, I chose to, and essentially it's all about increasing your chances of success.
Yeah,
right?
no,
I could see
true.
that. So,
I get that.
So that's how.
Awesome. And 2 years in, do you think you guys are doing? You guys are obviously leading the space when it comes to this sort of a product, but at the same time, there's so much out there, many variations of this sort of out there. It's sort of taken over mainstream fintech as one of the things which work in this space. Would you say that? Like we've had folks here talk about payments, P2P, wallets. Like we've covered everything fintech.
Okay.
And who hasn't, right?
Yeah,
fintech
absolutely.
is spoken about a lot.
Yeah.
What made you sort of focus on this one line of business, and how have you seen it progress?
So I think from a building perspective, one North Star we have always maintained is that if you really want to make something really large, right, and impactful, it has to be integral to a consumer's life and that part of life, right? So the consistent mission that we run at ETMoney is to ensure that whatever you're building is part of a consumer's financial life, and is solving for that specific problems during the journey of the consumer, right? So if that is the starting point, then you actually start to drill it down, saying that, okay, what is it that people are facing problems related to money? That's how aggregation of, having single window view of your money came into place. That's how smart spends came into place.
Right.
The other driving force was that we have this access to a huge consumer base from Times Internet. And what is it that cuts across a larger base of, what is that problem that cuts across a larger base than a specific, say, for example, just insurance.
Right.
The universe of people who are looking at, insurance on a regular basis is much lesser, right? So we combine these two. And the third one was, is there a mobile first solution which is much more scalable, right? So, and that's how smart spends actually started to happen. Right. And the aggregation of money into one place is one big benefit that you start off with at ETMoney. Second is then we actually said that next is to help people grow their money, and that's how investments comes into play.
Correct.
As we moved along, and it's all user evolution. We did not start off with saying that we'll have all of this. In hindsight, it seems like a very structured approach to it, but it is like, this is needed now. Let's just whether we should do it or not do it also is a big question, right?
Correct.
And then we actually moved to insurance as well, because that is an integral part of your financial life.
Okay.
And recently we actually closed it with the whole cycle being with loans and
personal loans.
So I think how the build-up has been very different is extremely consumer-centric, Red. We did not actually give you a plethora of thousands of options to compare and then figure out your life.
Correct.
But because we understand and because we are mobile first, we have a far more stronger understanding of the user.
Right.
And you could give a pointed solution to each of these problems, right? So you will not have like Hajar mutual funds thrown at you and you have to figure out.
Correct.
We'll come back with a much more, smarter solution, which makes sense for you. And I think the shift from a consumer point of view is very, very important. So what has happened is that in the past, when we were building in our earlier avatar, the era of your, chacha actually managing your money was very prevalent.
Correct.
Right? And not only money in terms of investments, but also in terms of all financial decisions.
He was your insurance agent, he was your stockbroker, he was your everything.
Yeah. So I had this joke with anytime we actually talk about is that there is this mythical creature of your LIC agent who actually always appears in like family occasions, and then after the deal is done, he's like suddenly vanished. So it's like, imagine. So it's like it's that kind of era that has actually started to move very
online
now.
Yeah.
And
the LIC agent was this guy who
uncle.
Your local uncle.
LIC. That's where at that point of time, and it's still prevalent to a large degree.
It still is. I still see my insurance agent at family functions.
Yeah. So I think from a consumer point of view, there is a clear underlying shift. Like people are very clear now that they want to take control and they want simpler solutions. Nobody wants to go to a bank branch. I'm sure that nobody wants it. Yeah. And at least in this room, we are clear.
Yes.
Yeah. And I'm sure that, the whole advisor segment or agent segment is also kind of not looked at with the same level of trust that was there 5 years ago. Right. And if that is happening, right, and which to me comes across as this segment is really challenging the basic construct of the ecosystem.
Right.
Now, the basic construct of the ecosystem is such that you actually is supremely inefficient. So look at the whole ecosystem to be a very high inefficiency loop.
Okay.
Right. The loop starts with you having a very high cost structure driven business. So you have like 1,000 branches,
right,
hundreds and thousands of people managing customer relations. To actually recoup that high cost, you will have to make high margin products.
Right.
Right. You make high margin products in financials, which is actually makes the product complex.
Yeah.
Now, high margin product complexities being there, you cannot distribute it online.
Yeah. Right. Because you need so much to explain
Right.
Yeah.
Now, what happens is because it is so push driven, instead of it being pull driven, it starts this cycle of, being pushed at all the time. Right. And what has happened over a period of time is that people have either people don't take action because it's too complex. Yeah. And that's what I think you wouldn't have started investing till the time a simpler solution was available in the market. Right? And hence the penetration levels are abysmal. Or what happens is when you have actually taken action, you will sooner or later realize that you got ripped off.
Yeah.
Right? So what happens is the overall ecosystem is actually getting lesser dollars.
Yeah.
Right. So if you're getting lesser dollars, then you have to figure out which products to make which are high cost again.
Right.
So it's like this whole inefficiency loop.
Can you give us an example of a complex versus simple product, just so to set some ideas for people?
Insurance, maybe.
Yeah, insurance. Yeah. I think like there is a term insurance product, right, which very clearly says that for X amount, you get covered for say 5 crores of insurance or a 1 crore of insurance. And if something happens to you, your family gets that amount.
Okay.
Very simple product. LIC, which still holds like 72% of the market share, did not have this product till like last 2 years.
Oh, they never had term insurance.
They never had term insurance, which was like a very and they would have that product, but it was never sold in the market ever.
Right.
Why? Because people didn't. It's a simple product.
It's a simple product.
Or is it a complex product?
It's a simple product which doesn't make money for the
it's
insurer.
just because it's not a...
The thing is that for like $10,000, if you're a 24 years old person, you are getting covered for 1 crore. Right? 1 crore of rupees. And and the economics doesn't actually make it more, it's very low margin.
Okay.
For the insurer in that sense.
Okay.
Right? Now, because it's low margin, agent doesn't sell it. If the agent doesn't sell it, then you're not actually kind of getting. So simpler products it's like this whole loop, right?
So what do they sell? The complex ones?
The complex endowment plans, which will always be positioned as, if you're putting so much money, you're not going to get anything back in 25 years if nothing happens to you in 25 years. But the whole objective of taking insurance is something happens, how your values reflect. So it actually is sold as a pseudo insurance and investment product combined.
It's an investment product. It's not really insurance.
It's actually sold as an investment. The LSE uncle always tells you about how much you're getting back.
Yeah, it's an investment. It's not an insurance product.
It's not. And the whole thing is, if you really do the math around it, this is the funny part of it. It is sold as an investment product, and if you look at the rate of return that you get from that investment product, is somewhere between 5 to 6%.
So it's actually bad.
It's a bad thing. And then what happens is the second part of it which is the whole thing of you getting insured, right?
Coverage,
The coverage is like 1/10 of what you should be having.
Yeah.
So it's a combination of product. The combination of product is there because you want to have it high margin. The whole inefficiency loop. So that explains it that, how, and now this is changing, right? Now every damn, insurer has a very strong focus on term as a key thing. And then there was this whole era of ULIP as a big, thing.
Is that because of online sales accelerating? Because now they have a way to distribute it without the high margins that are required for the other ecosystem that they had developed?
Yes, to one extent that, and to the second extent that consumers have become smarter.
Okay.
Right? So both the things are actually forcing to create those products out.
Interesting.
Wow.
Yeah, so this is the so now the whole ETMoney whole thing is focused around solving for this inefficiency, and the way we are building it is a much more platform oriented approach. So we'll right from imagine that if you want to create a financial services company grounds up as of today, how would you start building it?
Let's talk about that platform. Let's take a quick break and then let's get into the platform thing.
Sure. Yeah, absolutely. Let's do that.
Hey, it's been another great week on IVM. Are you following us on social media yet? If not, you definitely should be. We're IVM Podcast on Facebook, Twitter, and Instagram. Last week, we released a brand new show called Know Your Kanun with lawyer Amber Rana. This week, Amber talks about the laws and rights related to sexual harassment in public spaces. On the Kinetic Living podcast, Urmi talks to none other than Rajesh Kumar, aka Rosesh from Sarabhai vs. Sarabhai, to talk about his fitness transformation. On Shunya One, we had an interesting conversation about all things money, insurance, and more with Mukesh Kalra from ETMoney. On the Kolaba Cartel this week, Abhishek and Gauri talked to me about their philosophy of building and organizing a team. On the Seen and the Unseen, Amit Verma talks to the journalist and author Snigdha Poonam about her first book, Dreamers, which chronicles the aspirations of a young India. On the Pragati podcast, Pawan and Hamsini decode the concept and the meaning of the term Swaraj with Professor Akash Singh Rathore. We have also released a new podcast called Woody Woodpecker with Rachel Lopez, where she deciphers a new word every week. I'm not revealing what this week's word was, so check it out to make sure. Also, guys, we are hiring a new producer, a social media intern, and a graphic designer. If anybody's interested, please apply to jobs@indusvox.com. And with that, continue with your show.
All right, welcome back. We've obviously been talking to Mukesh about a whole bunch of things of how ETMoney came to be and why I would say this sort of a fintech product is now really growing in the market. But before we get into a bit more about the the user aspect of it and why people are, investing easily so much on an app and doing so much. What challenges did you face to actually build the underlying tech which powers this? I mean, what has changed in the past 4 or 5 years which enables you to really do this? Because the impression most people have, or let's say our generation, which thrives on information and has grown up in an information age, doesn't trust the chacha and the uncle because they don't see the right data. When they go to a insurance company or a mutual fund website, you see a complex sort of website and with the same font size they have on the paper when it says fine print.
So, and sometimes you actually are asked to sign on the website.
On the screen.
With a mouse, no? I've done that.
So what changed? And how did you leverage?
So from a tech perspective, I think the no-brainer thing is that mobile has come into full flow. But from our perspective, right, now you really want to solve that problem of, personalization can only come in once you have, mobile brings in personalization because it's inherently much more closer as a thing. Now, what is possible now because of mobile and data, right? Even a basic user data of the user agent that is there in the mobile, right, can give you a wealth of information, whether the user has an iPhone, which operator is he using, whether he's on Wi-Fi, not Wi-Fi. These small things can also help you personalize to an extent.
Oh,
right.
Yes, of course. Yeah.
Right. These are very basic things. These are high density data. It's not even like we have to figure out what phone you have to. Right? So I think what clicked for us was that we always wanted to do personalization, but there was no possibility of it we being able to do at scale. Because mobile is now available at scale, data is also available at scale. Now you can personalize at scale. Now that personalization means that you will have to do the underlying piping to be in a way where you are actually building it out with personalization as a core focus.
Okay.
So the way we have built the whole, as I was saying, the platform approach is that there are central components which are data oriented, which actually figure out what is the best product that you should be buying based on your risk profile. So risk profile is actually calculated in the backend to actually ensure that the right set of solutions are actually being recommended to the user. And all of that is in the background. The other thing is that I think the supplier ecosystem, when I say suppliers, is more on the other side, the manufacturers, the mutual fund companies or the insurance or the banks.
Right.
5 years ago, they were not ready. The whole understanding of what is an API in itself was a huge question mark, right? Right now, people are opening up, which is a great thing. The other way that we have actually leveraged this is actually co-created some of the products with them.
Oh, okay.
The smart deposit solution, we actually co-created with Reliance.
Yes.
So you invest, why should you be actually putting your money in savings account? And if savings account is there, what are the advantages of savings account? You have to ensure that those are actually matching and all that, right? So instant redemption, for example.
Right.
So when you do instant redemption on smart deposit, so whenever you need money in once you have invested in smart deposit, savings account gives you that liquidity, and that's why instant redemption was an important thing to have. Now to actually create that instant redemption, that the moment you actually tap on say 10,000 rupees, I want it in my bank account, it happens within seconds now.
Yeah.
Right? To actually enable and work with Reliance, earlier wouldn't have been possible. But they actually we co-created that API, said that how the whole piping in the backend actually happens, the IMPS transfers that happen, all that piping had to be thought through.
It just works, yeah.
It just works, right? So I think the ecosystem is getting there in terms of API, but it has to be kind of co-created. It's like a mid-stack kind of level right now. And mobile was definitely an enabler. I'm just thinking through, and the way we have looked at, another big cost is actually ops and support in financial services, which people don't
call
really.
centers and is that
the call center is huge cost.
Correct.
Huge cost, right? And if you really look at it, the technology around that is getting far better.
Okay.
Right. So what we utilize in ETMoney is a chat-based approach for support,
Right.
which is what people are now naturally moving to.
Correct.
Right.
Correct.
But the way we have actually looked at it, it's an opportunity to engage, not as an opportunity for a user to complain. Right. So our engagements level are actually much higher because of that, and we are able to convert those moments of complaints into positive inclinations and actually get referrals on the fly.
Oh wow!
So what happens is once we have actually solved for your issue, we could just send a notification, or not a notification in the chat itself. We actually ask for people to do referrals.
Wow.
Or you actually ask people to actually rate your app. So those are positive moments. So you're converting like negative moments into positive moments just because there is a chat enabling ecosystem which is faster.
Right.
And
it's more efficient on the phone itself.
It's more efficient.
Yeah.
So for example, from a data point perspective, right, the number of agents that we have who are supporting at the scale. Now we are larger than some of the players who have been in the space for 11 years already. Right. They would have a ops and support team of close to like 5x of us. And we are handling the same scale at like 1/5 of the strength.
Wow.
And I think that actually again brings me back to the whole ecosystem that we're creating at ETMoney is far more efficient, and that wouldn't have been possible like even 3-4 years ago if those the consumer shifts or the platforms that are there to actually do chat and support and all that. Similarly for support, if there is a arrangement for if you have a question on the fly, we could actually arrange an advisor call, right? And that call gets scheduled on the time that you say, and that is all automated.
Right.
So it will automatically connect the agent at the time that you have set.
Oh, wow.
And you also get a call, the agent will also get a call, and you are all connected. So all this is underlying.
This I have never tried out actually. And you actually have an advisor who speaks to
on a very, very, limited basis. Like, in areas where it is like really required.
Oh, that's interesting. So again, now on that note, right, how are you ensuring that the people you cater to today, your demographic that you cater to is again the person who wants this transparency and wants to see the status of their money and the movement of that money and whatnot, right? How do you finally balance the whole human trust aspect with the machine trust aspect? Yeah,
I think, as I said, the era of actually being subjective about these decisions is gone. Yeah. At least from the segment that we are catering, which more millennial oriented, after 1980 born kind of segment, and they value data transparency. And because now people are getting more and more aware, the way we are actually helping people discover products is also uniquely different. Like we have created a very simple report card of a mutual fund and on the other products as well, even insurance.
Right.
In an English format. Like when I say English format, it's obviously English, but people can understand, relate to. Readable.
Human readable, understand.
And it is like 10x simpler.
You don't have to be a lawyer.
Yeah, you don't have to be a lawyer or like a finance expert and actually do that, right? And that wouldn't have been possible if the way we have actually merged the product data with our understanding of the space. So one of the philosophies that we actually applied to that is, if I'm a pro, what are the set of activities that I do to reach a conclusion, reach a decision, and how can technology help short circuit that? Very simple, thing to do, but essentially the piping to actually get that done is like phenomenally hard because we have been into the space for almost 1.5 years, but hardly people have been able to really figure out how the simplification can be. So there are I think a lot of undercurrents that are helping the ecosystem, and hence fintech is like the next big opportunity. Right. The whole India stack thing, though I have my reservations on how it is actually kind of panning out after the KYC, UIDI. Right. We have stayed away.
It's still very complex, right? It's still not so as easy as they make it sound to be. You still have to do pretty much a full KYC.
I think
without maybe sending your paper in at the most.
Technically, I don't think it is very complex. But what is complex is the regulation to ensure the protection of the ecosystem.
Right.
Like we are into that era of the companies moving faster on technology, but the regulators still kind of catching up.
Of course.
So that's the problem that is happening, and I think in like a year or two it will get, and then we'll probably use it much more profusely than we are using today.
Interesting.
So what are your reservations, around this? Are they primarily security based, or are they just optics based, or?
I think it's more to do with we not finding a very strong confidence in using that stack yet. Okay. Because of the changing goalposts.
Okay, that's fair.
Yeah.
So that's the problem. So as I said, technically to actually do a thing is not that hard.
Right.
And we have done so much complex stuff in.
Yeah, exactly. That's what I'm wondering. Compared to
it's just that what happens is it's just whenever a platform like at that scale comes in,
right,
there will always be loopholes.
Yeah.
And those loopholes will always get exploited.
Right.
And then the ecosystem evolved to make it much more confident driven, right?
Right.
So we are at a stage that we are waiting it out and saying that we have a better system in place,
right,
which is much more, as I said, zero margin of error when people are dealing with money. And again, then there are these limitations that come with it. So if you do eKYC, you cannot do like 50,000, more than 50,000 investment. Yeah. And that, while you have put the restrictions, but there's no way to figure out that restriction at an individual level.
Oh, really?
So I don't know whether you have done the So you have come to ETMoney, for example, right?
Correct.
And I have to put the restriction of 50,000 a month in a year across the AMCs.
Oh yeah.
So if you've done outside, I don't know that. So what will happen is, effectively, you will do the transaction and it will fail.
Oh.
And then you will get pissed off with ETMoney because we kind of... So those are the areas, and eventually, when it comes to banking, you have to do it within like 6 months once the transaction has happened, or within 12 months basis on the amount.
Oh, I didn't even know there were so many weird.
Yeah, there is like so the whole thing is that while the concept is great and it will definitely evolve, make us far better as a country.
Right.
It's just that I think a bit away from it being
it's
mature
not where it
enough
needs to be.
Yeah.
On another note, I actually want to ask you about, again, you've built and evolved the product over the last 3 years. Times have changed when it comes to the kind of the aptitude for people to do things with their phone and do things, especially involving their money on their phones. The appetite has increased, right? We saw the wallet era, we saw all of these various fintech eras and all. Now you are dealing with people who are seriously using your tool, myself included, as the primary investment vehicle, right?
Yep.
And that means there is a fair amount of uptick in even that. And you're seeing with all the other products you've launched, whether it's insurance, loans, whatever it be, these are all getting adoption very quickly.
Yeah.
Do you ascribe this only to this whole transparency mindset and data-driven mindset, or do you think something's fundamentally changed with your audience as well?
Yeah, so exactly. I think, as I said, the whole era of somebody else taking that call is one big shift that has happened.
Right.
People have become smarter because of the information dissemination that has happened because of mobile.
Right.
And plus, people are much more smarter. Right? Just to give you a data point, it's funny that usually in the market, everybody would look at it that when the markets are high is when people actually start investing. Right? You will see a lot more, and all the traditional players saying that we are recording like great numbers when the markets are high.
FOMO. People have fear of missing out.
Yeah, but on our platform, it's actually happening the reverse.
Okay.
So I think when people are more bought into the decision, they would have actually figured out what is the right
time to
do it. So when the markets are high, we are not seeing a huge uplift. And when the market is down, we are actually starting to see more people come in. So it's like
interesting. That also plays into your earlier comment about inefficiencies, right? I mean, like
exactly.
Yeah.
Like it's usually the retail investor who gets short-circuited. They buy at the highest and sell at the lowest. But I think it's more to do with also another big thing that has happened, at least in investments from an external perspective, is there is a regulation which SEBI has, that 0.02% of all the money that is invested, or AUM, has to be invested in investor awareness.
Oh, okay.
So that actually, because now the industry has become so big, that's like a 500 crore budget.
Right.
That has to be managed by the industry to create just investor awareness, right?
Oh yeah, of course. We've had mutual fund sponsors.
Mutual fund sahi hai.
Mutual fund sahi hai.
Yes.
Right, so I think the whole ecosystem together is kind of coming together. Right from tech, right from consumer mindset, and the regulators also being, this government being pro-digital, like that's why the opportunity is like so exciting to chase.
Only growing and growing, right? What are the insights you have when it comes to consumer behavior which you've seen, especially in the fintech space?
Or if you have funny stories around consumer behavior, that'd be cool too.
Yeah, after a point it becomes boring in terms of talking the same piece on at least related to money. The thing is that
I know I had to submit a selfie video on your app.
Now, how many people are sharing your Sheila's selfie videos? That's the question, right? That's gone viral in your office.
No, it is not. Unless he has done something. Yeah.
No.
Yeah. So essentially, I think some of the funny things that have happened is that the whole OTM thing that we have, of people doing a one-click investments in smart deposit, it was a loophole that we needed to plug. is that when you actually do a deposit, smart deposit increases your amount in the balance. So suppose you have 10,000 in your smart deposit and you say that 10,000 more I'm investing, right? And it actually adds as a available balance.
Right.
Ooh. Instead of invested.
Instead of, no, it's
But it actually doesn't get transferred.
It doesn't get transferred till 2 days.
Oh, okay.
Right? So we had few guys who just kind of kept on adding
Oh, wow.
through ODM.
Okay.
Like to the tune of like some crores of rupees because they thought that it is actually,
Increasing.
adding. It is increasing. Like one tap, I'm seeing the money go up in my account.
Oh, wow.
And it's funny, right? So these set of guys, and we looked at the pattern. It was very funny. The people actually did that waking up at 2 a.m., timing themselves at 4 a.m. and then 8 a.m. because they should not get caught about getting this money out. And this was just a simple thing that no money transfer is happening.
Correct.
It's just the available balance is going up. So it was like, that was funny. People are actually kind of, the insights from there is that when it comes to these kind of systems, right, we need to obviously have a very strong loopholes plugged.
Fraud detection.
Fraud detection and all that. But also that the engagement levels are like
Quite
way,
high.
way different.
Yeah.
Like I wouldn't have imagined people actually, like we still have people, on the app between 12 to 2 a.m.
Yeah.
And it's a significant amount. It's not like a small number.
Wow. So people, so these are times.
So I think probably this is like, people are having a downtime.
Yeah.
And
they're thinking about their money. They're thinking
Yeah.
about what will happen to me next month.
Right. So I think
Sleepless.
there are like lots of such instances.
So money does give you sleepless
It
nights.
does.
And
Yeah.
you guys are seeing the data to back it up.
Yeah.
No, but that's the thing, right? These are accessibilities which you wouldn't have afforded in the real world. You couldn't call up your LIC uncle at 2 a.m., I'm sure. But this
Probably
is
not.
awesome. Where do you see this going? Obviously, there's a big market for you guys to go after. But where do you see the platform going? You've pretty much covered all the possible fintech solutions now at the right time.
I think two things very clearly stand out. We still want to stay focused on having a solution-centric approach. So we will not have like 100 more products. So we are sealing off in terms of at least these are really large areas to cover. And now we are at a stage where we are actually recouping our marketing budgets.
Oh.
So we have proven the economics actually working for us. It's all about now really ramping up at a faster clip. And that's what the focus for the team is for the next.
Interesting. I actually was in. I made a note earlier of when you said about how this space needs, even for the old school people, you need to. You get your payoff is very late. You have to wait a long time to get the payoff. So maybe could you share a little insight about what is the actual revenue model of these sort of platforms? Is it all the commissions-based model? Is it? And when does that actually come through? Is it when and I sell my mutual funds? Do you make money, or how do you make money during the process? Because as an investor, typically, especially being an Indian investor, I think you just hold forever.
Yeah.
I have people who have stocks for last 20 years, 30 years, 50 years. You never sell. So how do you get paid?
So essentially, our models are still commission driven, right? And fundamentally, we would want to actually move away from that as much as possible. And the way we have actually structured ourselves, at least at ETMoney level, to ensure that nothing of commission-driven push doesn't come to the consumers, is that we take exactly the same commission from each of the suppliers, irrespective even if we are giving like a larger ROI to them.
Right.
Now that puts us very strong. We are giving away some part of revenue, and also we are taking some more at an average level, right?
Right.
So that's how we largely make money. And because our customer cost of acquisition has been so low, and 60% of the users are organic, and like that gets recouped in the first transaction itself. So that is.
No, but the point I was asking about was just the fact that unlike let's say a bank who actually delivers you the fund, or fund house which is actually selling you this fund, right? They probably are making money somewhere. I mean,
Okay.
But
so,
as a platform, how do you do it until people actually sell or people actually
Got it.
do something with you?
So the way, at least in the investment space, the way it works is that for every 100 rupees that you would actually invest in, say, an equity fund, right, you get charged around 2% of the
Correct.
as an expense ratio to manage your money, and that is charged by the mutual fund company. Right. We get a part of that.
Okay.
That's how we make money.
Interesting. And that's at upfront.
That's a trail. That only happens after it's annual. It's not upfront. Upfront is gone.
Oh, okay. Yeah, it's annual, right? You don't actually. It's based on how much you've held, how much is held with you.
Yeah. So it's more aligned in a sense that only when you are actually having higher returns, the AMC is getting more money, and we are also. So it's more aligned to you actually getting more returns.
Okay.
And only then we make money. So it's that's how, because it is trail. It's not upfront. The moment it becomes upfront, then I will just do one thing, which is churn.
Yeah.
So I'll move you from one guy to the other guy to other guy to other guy.
Right.
So we are actually completely trail based.
Interesting. All right.
So this is like a very different model, right?
No.
But actually accrues over time significantly.
This goes back to the first point about how the old order was always trying to make things more complex and earn a very high margin upfront to this sort of model where you have to be transparent about everything, including how much money you guys are making.
Yeah.
Right?
In fact, SEBI has come to the point of showcasing how much money as a distributor you paid or your distributor got, and that comes in the statement, which is so that's a good set of transparency. I think it's good for
that is good transparency of that kind. It's better, right? I mean,
the only problem with that is people should not go back to the distributor and asking, yaar tune itna mere se paisa banaya, I want it back.
But that's the LIC uncle na. Uncle commission.
That will happen soon. I'm sure your chatbots will get a lot of those, or maybe they already do. But I think this is great. I'm obviously a big fan of the product, and I hope to keep using it and see where you guys go with this.
Yeah, absolutely. We are excited about the opportunity, and thanks for having me here. This was my first ever podcast. So
I know.
Great. And
I hope you, I'm sure you'll get some feedback on Twitter. So where do people find you, if you could tell us your handle?
It's Kalra Mukesh.
All right, on Twitter. And
on Twitter.
Do also join our Slack channel, which Amit will
it's
tell you about.
available at ivmpodcast.com/Shunya One. There's a button over there. Click the button, enter your email address, and we'll send you an invite. Also, please make sure you do the reviews and ratings thing, iTunes, YouTube, Savan, Castbox, wherever you want to. Give us a rating, give us a review, whatever you do, wherever you do, it helps.
Yes, and go buy some mutual funds or insurance on ETMoney.
Yeah. Thank you.
Sure. Or get a loan after you post a selfie video.
I don't know if you should say that without us then having to do that whole disclaimer at the end of it. That this is not a financial advice product.
Yeah, but you should still use ETMoney.
You should use ETMoney. Download the app. There you go. There's your call to action. Download the app. But don't necessarily do anything, at least not on our side.
Yeah, we are fine with that. Clever Tap will help us get the things going.
All right. Thanks so much, Mukesh.
Okay, thanks. Thanks, guys.
Some time ago, 5 successful restaurateurs came together to form the Colaba cartel. The founders of the table, Gauri Devi Dayal and Jay Yusuf, partnered with the founders of Woodside Inn, Abhishek Honawar, Pankil Shah, and Sumit Gambhir to open a new restaurant in Colaba. If you've ever dreamed of opening a restaurant or love eating out, you want to listen in. The Colaba Cartel. This exclusive 10-part series is hosted by Gauri Devi Dayal and Amit Doshi. Catch new episodes of the Colaba Cartel every Monday and Thursday on the IVM Podcasts app, website, or wherever you get your podcasts.
Did you know that Parsis in Mumbai, instead of being left at the Tower of Silence after they die, are now cremated? And why? Because a cow fell sick in the early 1990s. Did you know that the smog in Delhi is caused by something that farmers in Punjab do and that there's no way to stop them? Did you know that there wasn't one gas tragedy in Bhopal, but 3? One of them was seen, but 2 were unseen. Did you know that many well-intentioned government policies hurt the people they're supposed to help? Why was demonetization a bad idea? How should GST have been implemented? Why are all our politicians so corrupt when not all of them are bad people? I'm Amit Verma, and in my weekly podcast, The Seen and the Unseen, I take a shot at answering all these questions and many more. I aim to go beyond the seen and show you the unseen effects of public policy and private action. I speak to experts on economics, political philosophy, cognitive neuroscience, and constitutional law so that the insights can blow not only my mind, but also yours. The Seen and the Unseen releases every Monday. So do check out the archives and follow the show at seenunseen.in. You can also subscribe to the Seen and the Unseen on whatever podcast app you happen to prefer.